All across America, people are needlessly overpaying the interest on their mortgages and other debts without even knowing it. In this video, we will show you how thousands of people in the U.S. are saving interest and paying down debt faster than they ever thought possible when using the proven mySmartPay wealth solution system. So let's get started. Over the years, companies that have created products and services that help to change our lives for the better, such as Microsoft, Apple, eBay, and Starbucks, received the Ernst & Young Entrepreneur of the Year award when they first started. It's a highly recognized award, and Ernst & Young is known as one of the top 3 accounting, tax assurance, and financial services firms in the world. The creators of this revolutionary interest-saving system received this same award in the financial services category. The creators of this program have also been recognized by publications such as Success Magazine, Mortgage Planner, True Wealth, and Broker Banker. Plus, they received the Editor's Choice Award from Personal Real Estate Investor Magazine. So what is the mySmartPay Wealth Solution? Well, first, we would like to tell you what it's not. It is not a refinance. It is not a mortgage modification or debt roll-down program. It is not an increase to your minimum monthly payment. It does not require you to change your bank or lender. And most importantly, it does not require you to change your current lifestyle.
So, what is mySmartPay? It is a web-based software system that acts like a financial GPS and is custom built for your particular situation. The system is actually going to use similar strategies that banks have used against us for years and put those strategies into your hands so that you can now use them in your favor. The system examines your total financial picture in detail, such as how your mortgage loan calculates interest, the actual interest rate, the term of the loan, how you receive your income, and your monthly budget. It then uses high-level financial strategies and factorial math to prompt you on a monthly basis what will be the most efficient way to disperse your budget, to maximize your interest savings, and achieve complete financial freedom in the most efficient manner possible. Like millions of consumers, we all want to save time and money on our mortgage. mySmartPay can help you do both, with the average payoff on a 30-year mortgage in only 11 years. Let's show you an example of what your system would look like. Once you first log in, you will see your payoff date, years to pay off, as well as your potential and actual interest saved. However, all of these can be changed. By simply hovering over the plus sign in the bottom corner, you can change the display to whichever you would like, such as principal paid. However, for our example, we'll go back to the original. Next, we will take a look at the action page. This is where you will spend 95% of your time. The system will want to know what you did financially during the month, such as, did you receive your income and in the amount expected? Did you make the minimum debt payments? Did you spend all of your monthly living expenses? And did you do the red arrow suggestions? The red arrows are telling you to move money to a particular debt or into your savings account. Let's now see how easy it is to execute out the month of August. Simply click on the first line of Rebecca's income, hit execute, and verify the amount. The system is expecting $1,200 for Rebecca's income, and Rebecca did receive $1,200. So you would click Final Transaction and then execute. Next, we will let the system know that we made the mortgage payment. So again, we'll click on Mortgage, execute, and then again execute. Now for the remaining 4 items, what we can do, we can execute multiple actions at one time. We would simply hit Select Month, execute multiple actions. The first area we'll come to will be John's income. The system again is expecting $1,300. However, this pay period, John did not receive $1,300 because he worked additional overtime. So he actually received $1,350. So we just simply changed that to $1,350. On August 15th, Rebecca's income, she did receive $1,200. August 19th for John, he did receive $1,300. Now we're to our living expenses. We have budgeted currently $3,300. However, at the end of the month, we've determined that we only spent $3,100. So again, we just simply change that to $3,100. We then hit Select All and Execute. Now you will see your years to pay off went from 11 years down to 10.9. And within our first month, we have actually saved $1,992.63 in interest. As we execute out the living expenses, if we do not spend it all, it will then use the excess towards your debt or toward increasing your emergency fund the following month. The next section we will look at now is the budget screen. This is where you can itemize all of your living expenses to track where your money goes each and every month. We will itemize a few living expenses here so you can see just how easy it is. So let's add in some utilities. We will select Add Expense. We will title it Utilities. We will then select a category, which would be Bills and Utilities. It will then ask us if we would like to itemize this budget, and we would. So we would hit Yes. So the first one that we will come across will be our electric bill. So we'll just title it Electric Bill. We will select a category of Bills and Utilities. Now you can also see we do have subcategories if you would like to break it down even further. But again, for simplicity's sake, we will simply use Bills and Utilities. We will set a budget amount of $250, and we will now hit Save. Now, if we would like to add additional utility bills, we want to break it down even further, we would just go to the Utilities section, we would click Edit, Add Expense. So what we'll do is we'll now break down a water bill. So we will type in water bill. Again, we will select category, Bills and Utilities, and we're going to set aside a budget of $50. Now we will hit Save, and you will see both the electric bill and the water bill itemized here. Now, as you can see, we have added $300 in utilities. However, they were actually coming from our living expenses. So that means we need to adjust this dollar amount to $3,000. So we will simply click Edit, change this to $3,000, and then hit Save. Now, this is also where we can make a permanent change for an income. As an example, Rebecca just received good news that she's going to be receiving a raise. So she will no longer be making $1,200 twice a month. She will now be receiving $1,300 twice a month. So to reflect that change, we simply click Edit. We go in there and change it from $1,200 to $1,300, and we click Save. Now watch the years to pay off. It went from 10.9 down to 9.6. As you can see, any changes, either permanent or temporary changes or one-time changes, you can see the immediate impact on what it will do for your years to pay off. mySmartPay is a very, very dynamic system that will always give you accurate information based upon what you did financially during the course of the month. Now, let's take a look at the accounts screen. You can see your bank accounts are listed here, and the balances will change as bills are paid and paychecks come in. Also, you can see the principal balance on your mortgage decrease with every payment. Now, this is also where you can adjust your emergency fund so you'll be prepared for any unexpected expenses that may come up instead of putting those expenses on a credit card. We simply go to our savings and we hit Edit. Now, as we hit Edit, at the very bottom, you can see that we now have $3,000 in our emergency fund. But we're not real comfortable with that $3,000. Perhaps we would like $5,000 set aside in case any unexpected emergency might come up. So we simply change that to $5,000 and we hit Save. Now, I want you to notice the years to pay off. It goes from 9.6 to 9.8. So for that $5,000 emergency fund or cushion amount, that added security that you now have, it's only added 2 months, 3 months to your years to pay off. Now, let's go to our reports section. If we go to our reports tab and we take a look at time frame, it will show you your year-end debt balances for past years as well as projected years. As you can see, the debt balance is decreasing at a substantially faster rate than would be if you were just on a basic biweekly program or even what you are currently doing on your own. The interest summary section will also show you the total interest paid as well as the projected interest remaining. We also do want to make sure that you do take advantage of our loan audit to ensure that your lender is applying all of the principal payments correctly on your mortgage. Our account managers are looking forward to your initial training to show you how easy and powerful the system will be for you and your family. Once the initial training is complete, your personal account manager will then follow up with you once a month for an entire 12 months to ensure that everything is going perfectly, that you are maximizing your interest savings, and to answer any of your questions. Remember, mySmartPay comes with a 100% lifetime money-back savings guarantee. We guarantee your debt-free date and your interest savings to the penny, and that's all in writing. What this guarantee covers is as long as the information you provided is correct and that you are simply responding to the system prompts, your payoff is 100% accurate. The great thing about mySmartPay is that it does not force you to follow or execute the prompts. Remember, the system follows you. You just have to respond to the system, and based on your decisions, it will update your payoff time. The 100% lifetime money-back savings guarantee is associated with whatever is reflected in the dashboard window. Thank you for your time. We hope you will take advantage of this opportunity to experience greater financial freedom. It truly is time to minimize debt and maximize wealth.